Our journey begins in the early 2000s, when the Islamic finance industry, still in its infancy, started to gain traction. The pioneer of this era was the introduction of Sharia-compliant bonds, known as sukuk. These bonds, unlike their conventional counterparts, do not involve the payment of interest, which is strictly prohibited in Islam. Instead, they are based on tangible assets, and their returns are tied to the profits of these assets. This innovation laid the foundation for a new era in Sharia economics and opened the doors for large-scale, interest-free investments. Fast forward to the late 2000s, another significant development came into play: Islamic microfinance. This initiative aimed to provide financial services to the underprivileged, adhering to the principles of Islamic finance. This was not just a financial innovation, but a socio-economic one, fostering financial inclusion and reducing poverty levels. As we entered the second decade of the 21st century, the digital revolution had begun to reshape every industry, and Islamic finance was no exception. The rise of Islamic Fintech was the highlight of this era. Digital platforms started offering a range of Sharia-compliant services, from crowdfunding to peer-to-peer lending. This technological leap brought Islamic finance to the fingertips of millions, making it more accessible and efficient than ever before. The most recent innovation in the timeline is the integration of Islamic finance with sustainable and responsible investing. This innovative approach, known as Islamic ESG, environmental social governance investing, aligns the ethical and moral principles of Sharia with the goals of sustainable development. It represents a significant step towards the convergence of moral values with economic growth. So what's the takeaway from this journey through time? It's clear that Sharia monetary economics is not just about adhering to religious principles. It's about innovating and adapting to meet the needs of the modern world, without compromising on ethics. From tangible asset-based bonds to digital finance platforms, and now towards sustainable investing, the evolution of this domain is a testament to its flexibility and resilience. In a world where finance often seems detached from ethical considerations, Sharia monetary economics offers a refreshing perspective. It shows us that it is indeed possible to balance moral values with economic progress, and that innovation is key to achieving this balance. This is not just the story of Sharia monetary economics, but a lesson for all economic systems around the world.